Ladies and gentlemen, good day and welcome to the Marksans Pharma Q1 FY’25 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors. Thank you and over to you, sir.
Thanks, Steve. Hi, good afternoon, everyone. A very warm welcome to Marksans Pharma's Q1 FY’25 earnings call hosted by DAM Capital Advisors Limited. On the call today, we are representing Marksans Pharma Management, Mr. Mark Saldanha, Founder, Chairman and Managing Director, and Mr. Jitendra Sharma, Chief Financial Officer. I will hand over the call to Mark to make the opening comments and then we'll open the floor for questions. Mark, please go ahead.
Thank you, Nitin. Welcome everyone and thank you for joining us in our Q1 FY’25 earnings conference call. We appreciate your continuous interest and support for the company. I'm delighted to announce a strong start to the year, driven primarily by an increased market share and with our existing customers and some new product launches. This quarter, we faced a mixed demand scenario in the US region. However, based on historical trends, we anticipate the upcoming quarters to be far better. Pricing pressure on our RX products remains stable. The US is a strategic focus area for growth, and we are well positioned to capitalize on the opportunity that lies in this market. Our gross margin for the quarter expanded by 432 basis points year on year and 386 basis points quarter on quarter, primarily due to the reduced raw material pricing and the depletion of old high cost inventory. A favorable product mix also boosted our margins. However, we continue to face elevated freight costs, mainly due to the ongoing Red Sea crisis, container shortages, and port congestions. Regarding our newly acquired manufacturing facility, we are on track with scaling operations and have commenced our product supplies to key regions. We expect substantial revenue contribution from this facility in the upcoming quarters. Looking ahead, we are committed to growing our business in a sustained manner. Our next goal is to reach 3,000 crores of revenue within the next 2 years. Our focus on growing the business, launching new products, and enhancing supplies from our new facility will be instrumental in achieving this target. As a part of our commitment to a strong board oversight, I'm pleased to announce the reappointment of Mr. Vardhaman Jain as a whole-time director for a further term of 3 years, Mr. Mohanty as a non-executive independent director for a term of 5 years. Our board comprises of 5 eminent independent directors who are instrumental in guiding our company forward. With this, I'd like to turn it over to Jitendra to update you on the financials.
Thank you, sir. For Q1 of FY’25, our operating revenue was rupees 590.6 crores, an increase of 18.1% compared to rupees 500 crores in the same quarter last year. The US and North America was at rupees 251 crores, representing 29.8% increase year-on-year basis. UK and EU formulation markets grew by 11.3% year-on-year to rupees 251.5 crores. On account of volume growth, incremental market share from the existing customers, and contribution from new launches. Australia and New Zealand formulation market recorded revenue of rupees 65.6 crores, a 12% increase year-on-year basis. The rest of the world recorded sales of rupees 22.7 crores in Q1 of FY’25. Gross profit was at rupees 329 crores, up 27.8% year-on-year. Gross margin increased by 423 basis points from 51.5% to 55.7% in Q1 of FY’25. EBITDA for the quarter was at rupees 128.4 crores, an increase of 26% year-on-year, and an increase of 17.1% on quarter-on-quarter basis. The EBITDA margin for the quarter was 21.7%. This improvement is attributed to a higher gross margin and our continuous efforts towards enhancing operational efficiency. However, freight costs continued to rise during the quarter. Profit after tax was at rupees 89.1 crores compared to rupees 70.4 crore in Q1 of FY'24, an increase of 26.4%. EPS for the quarter was rupees 2. In Q1 of FY'25, the cash from operation is at rupees 45 crore and free cash flow is at 14.3 crores. The capex incurred during the period was rupees 31 crores. The investment is in line with our plan for scaling the acquired manufacturing unit in Goa, and we spent rupees 12 crores in the R&D, which amounted to 2% of the sales. We continue to remain debt-free and had a total of rupees 691 crores of cash as of 30th of June 2024. With this, I would like to open the floor to questions and answers. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Pal from MSA Capital Partners. Please go ahead.
Hello, am I audible?
Yes, you're audible.
Thank you. Congrats on the great numbers. A couple of quick questions. So now that our efforts in the backward integration have been successful and we've successfully tied up with CMO partner also, so can I say that a floor for our gross margins has been set, that the gross margins cannot decrease below a certain level even if the API prices in the near future go up? And what would be that level if so?
So obviously you're talking when you talk of a scenario where API prices go up, obviously if it is chemical prices, intermediate prices going up, we are not immune to that escalation because most of it originates out of China. But what we can avoid is, like I mentioned in the past, we can avoid the exploiting, raw material manufacturers exploiting the situation and increasing the prices beyond the cost of inactives or the intermediates that basically prices that go up. So from that angle, we will obviously we should be able to sustain our profitability, but at the same time there would be a cost increase. But what we would secure ourselves is with raw material supplies and availability of raw material and at a competitive price when the prices are escalated by other manufacturers.
Understood. And the gross margin that we reported this quarter, which has seen a sharp uptick of 420 basis points, do you think this is sustainable? Obviously, assuming that overall API prices also remain where they are and there's no sharp increase or geopolitical risk. So do you think that this is sustainable going forward?
So the quarter-on-quarter was 386 basis points, but I think it is sustainable. But barring the geopolitical situation that continues to evolve, on a daily basis, we do see freight pricing challenges happening. We are hoping it's not going to be for long, but as on today, freight is again creeping up. yet not to historic highs, but it is creeping up. But I do believe we'll be able to sustain these numbers.
Understood. And sir, the European and UK region, even though we've reported a good growth YOY, there's been a slowdown, that the growth has been slowed. So from 22% that we used to report earlier, we're down to 12%. So can I see that now this 12 to 15% is the new growth rate that we can assume in this geography because we have become a large player in that particular geography?
Yes, very accurately pointed out that the base has become bigger. So with the base becoming bigger and our market share growing, we are amongst the top 5 companies out there. But you will see a 10 to 12% growth happening from that region, and our team is working hard to even surprise us, and move ahead of that. But realistically, I think pretty much what you shared is what we believe will continue moving forward.
Understood. Just one last question before I come back in the queue. So, say 3 years out, right? So we have successfully penetrated deeper into the UK geographies, and now we are slowly penetrating and increasing our market share in the US regions. So say 3 to 4 years down the line, other than the US market as a very large growth lever, what are the other growth levers that you foresee that can benefit Marksans over the next 3 to 5 years?
So I do believe our UK is also, we've got a huge upside in our UK too because of our products that are in the pipeline. I do believe UK will grow in terms of revenue and will beat market expectation. The only thing is it may take a bit longer. But the fact still remains that is also part of our growth drivers that are there. The US will probably grow at a faster pace, but the UK revenue also we have a budget, we have a marketing plan, we have a sales plan, we have a next 5-year outlook on UK, and it is quite impressive from where we are today. So, but if you're asking me about beyond these 2 markets, where else do we see ourselves growing? I would like to grow in the European market, and for that we are working on M&As and we are exploring on those possibilities.
Understood. Best of luck to you and the entire team, sir. Thank you so much.
Thank you very much.
The next question is from the line of Ishita Jain from Ashika Group. Please go ahead.
Hi, am I audible?
Yes, Ishita, you're audible.
Hi, Mark. Congratulations on a consistently good quarter. My first question is on the capacity utilization. If you could tell us what the capacity utilization has been across the 4 units. So, the newly acquired facility is the capacity utilization is I would say about 25%, somewhere around 25%. And we do plan to every month it will keep increasing. I think last month we probably did 30%. So you can see month on month it's increasing. The other facilities are right now at probably 65% utilization. So 65% is the UK unit as well as the US unit?
Yeah, I'm talking of my the other unit in India and my US unit, and UK unit will be around the same, I think, yeah.
Understood. So my second question, so in US, we are currently in 4 categories of therapy areas in private label OTC. Are we going to be adding more breadth in terms of therapy areas, or are we going to add more vertical depth for growth in the US? I mean, essentially just trying to understand what will drive growth for US business.
Again, penetration with with customers, there are a couple of approaches in terms of distribution. Current customers, I mean, we have a huge basket, right? And all our clients don't have 100% of our basket. Some have probably 10%, some have 5%, some have 30%, some have 50% basket. So our aim is to first penetrate with pretty much all the customers with our full basket and to ensure we optimize our product range into every client. So that's what we talk of market outreach, market penetration, better reach into each client. So that itself is a huge potential because the market size is obviously big and will reflect our revenue growth. Second is obviously targeting new clients, new customers, which are relatively bigger and larger. And while we do both, we have to also make sure that we have a back end in place in terms of manufacturing capabilities to support that growth that will come in, because again, the U.S. market is a big market, so the volumes are huge out there. So and again, so is the UK, and our future market that we want is Europe also. So we have to look into various angles. But just to answer your question, which is more US specific, the approach is obviously a better market product penetration into existing clients, new product launches, and new segments in the market that we want to launch.
Got it. Great. Just one last question from my side. You mentioned that right now we are not so big in Europe, and you're looking for M&A deals for that geography. Just to sort of get some color, in Europe, are we looking to replicate the US model and be more private label OTC, or are we going for RX, or are we looking at a mix?
It will be a mix. It will be more like a UK model, which is also fantastically, which is good. And we have literally replicated all our business strategies across have been very similar. We have been true to our principles and to our objectives and to our strategy all over the world. And what we implemented from the first acquisition till first M&A till today, we are continuing operating the same strategy. So we will replicate what we have in UK.
Great. All the best. I'll get back in the queue.
Thank you.
The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello. Am I audible?
Yes, you are.
Yes, sir. Sir, just wanted to know what's the status on Teva plant. Has it started contributing to these numbers, and what are we expecting for this year?
So Teva plant, obviously in a standalone, if you see, it is contributed. In the consolidated, obviously when you consolidate, it does not reflect in the consolidation because we have just shipped out product. It has to yet reach, and we are planning to launch these items. So I do believe the consolidated, you will see the contribution happening probably in the third quarter. I mean, after September or October. But it has contributed because we have shipped product out. Like I mentioned, we have done revenue in the first quarter. The second quarter will be better than the first quarter, and the third quarter will definitely be better than the first and second quarter. And the fourth quarter will probably be the best quarter. So we do see an increase happening month on month, and yeah, I mean it is a reflection. If you look at our standalone numbers, it is reflecting on there.
Okay. Can you just quantify what was in the number terms for what revenue did we do?
I think we did in the first quarter we did about 60 crores from the Teva plant.
60.
60.
And we are kind of anticipating around 500-600 odd crores of revenue in FY'25. So
yeah, but like in the first quarter we did about 60 crores, but in July itself we did about 30 crores. So you can see it increasing month-on-month basis.
So any ballpark number that we can expect for this year, maybe?
So I do believe by the third quarter, we should be hitting close to 100 crores a quarter.
Okay. And by Q4, what for the whole year, what are you anticipating?
So when you talk of 100 crores a quarter, that run rate, it may not happen for the full year, 400 crores, but you are then trending at 400 crores, and then the fourth quarter will obviously be bigger than the third quarter. So we are anticipating that growth to continue from Teva. But more than anything, these are in the consolidated numbers. You will see the difference in the consolidated in the third and fourth quarter. Especially in the fourth quarter, you'll see the rise happening because all the products that you've shipped will then see light in terms of product launches.
Got it. And of lately saw some news article that, US and UK, we might see some more contract manufacturing coming in. And you have any idea or any news about it? Maybe
not exactly. I mean, they are different spaces, not in our space. I don't see that. I don't see any difference in what we are doing to what the article basically talks about. So I don't see that having any impact or any advantage to us.
All right. Okay. Thank you so much. Much appreciated. All the best.
Thank you. The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah. Hi, Mark and Jitendra. Congratulations on a really good set of numbers. Mark, my first question is that you've got some new marketing authorizations approved in the UK region. I'd like to understand what is the market size of that, and are these, margin accretive products as you've been referring to, which we will see incrementally in the UK market? That's question one.
Yeah, these are margin lucrative items. They are very niche products, difficult molecules. Sure. So they are not huge value drivers in terms of if you are asking whether the molecule will do a 10 million pound sales, that may not happen. But the bottom line improvement will add tremendous value to the bottom line.
Got it. And we have already launched these products in the UK market and they are live. Is that understanding correct?
No, we just got the authorization. It takes at least, 3 to 4 months to launch it. We have to manufacture it, we have to ship it out, and it has to be imported in, tested, released. So there's a good gestation time of at least 3 to 4 months, and then we'll see the launch happening.
Hello, Mr. Aejas. Does that answer your question? Hello, Mr. Aejas. Does that answer your question?
We seem to have dropped out.
No, sir. He's on the line. Okay, we will move on to the next question. It's on the line of Niharika from Equitas Investments. Please go ahead.
Hi. Thank you for the opportunity. So my first question is that we had onboarded OrbiMed as our investor and they hold around 11%. So have you reaped any benefits? Because that was our thought process of giving them preferential allotment.
There are multiple benefits. There are intangible benefits and there are tangible benefits. Obviously, they've added tremendous value on the board. We have regular meetings. They add tremendous importance to corporate governance and all the discussions that we have surrounding our growth, M&A strategies. We have been getting a lot of M&A targets to us. But that said and done, ultimately it's always our choice whether we have to move ahead with the M&A target or not. And that said and done, they are valuable partners to us. And obviously they have contributed a decent amount for us to go and explore and look at M&A targets. So I would say they've added both intangible and tangible value both.
Okay, understood. And any insight if there is any increase in competition in the OTC market from Indian, like bigger players who are wanting to enter into OTC market in, say, US or UK? And if yes, then how are we coping with it?
Well, I don't know. I mean, this is not a new segment that we've created. It's been existing there for years. And I guess all the companies have been there in the past and will be there in the future. So it's just the nature of the beast, and it does not matter, whoever wants to come in. It's an open market. I mean,
Is this because
that's
front-end distribution channel in place that we are kind of able to beat the competition? I'm just trying to understand our moat in the OTC segment.
our strength is our strength, and obviously we have over the decade or so we have mastered the art of in and servicing the OTC market. That said and done, our focus is there on that segment. It's a part of our focus area. In terms of competition is there in every segment, whether it may be RX or post-patent products or OTC, so it is not differentiated from a competition point of view. Like I said, it's the nature of the beast. We are in the pharmaceutical sector, which has a lot of companies involved.
Okay. And if like on a very broader level, so US is more margin accretive for us than UK, margin-wise on a company level?
I think it's a fusion. It's a blended fusion of both. And obviously today, UK, you got to understand, UK, we have been in the UK since 2008. So we've been in UK for nearly 9 years before we entered the US. US, we relatively entered only like 4 or 5 years back. That's in 2017, literally by ourselves. So we've still got a long way to go in the US market, but it's a big market and has potential of growth. We're still very small in the market, and that gives us hope and potential that we can grow more.
Right. And on the Red Sea front, I think last quarter we had incurred 9 crores more because of the Red Sea issue. Is there a number that we can give for the quarter that was because of some abnormal Red Sea crisis that we faced freight?
So, Niharika, we incurred additional freight of 12 crores. If we see the year-on-year freight number.
Okay.
So we incurred 12 crore extra in freight.
And even currently you are facing freight issues?
It is further increasing. So
okay.
Definitely right now there is no respite.
Okay, understood. And on the Teva plant, have you reached break-even in this quarter 1?
Yes.
Okay. And on the order book visibility, do we have like good visibility for say next 1, 2, 3 years? Like, because I'm not sure how our like orders are.
I mean, based on the visibility, the confidence level that we will touch 3,000 crores within the next 2 years.
And typically, how long is the contract for with a customer? Is on an average?
2 years, 3 years.
Okay. And this has some price escalation. This also element in the contract.
That price escalation. I mean, contracts don't give you. I mean, we are not into real estate, so. But normally when contracts are there, the price is fixed. But there is a clause that in case raw material prices escalate beyond a certain level, percentage points, then you can always go back and revisit and renegotiate the price.
Okay, and my last question is if you can give like top 3, 4 products, 5 products concentration on the total revenue, if we have that number.
Well, it's a very diversified portfolio. In UK we sell about 350 different products, and US our basket is nearly touching about 60, 70 products. So I think it's difficult to identify any molecule, and in a way that's what makes it very robust, because we don't have one standout molecule which says, "Oh, well, we are doing 100 crores on this molecule." That's not. When I look at the numbers, I don't see any single molecule standing up like a linear, like an Eiffel Tower. The bar chart is literally at the same level of maybe 20, 30, 40 products. Yeah.
Okay. Understood. Thank you so much for answering all the questions.
The next question is from the line of Viraj Mahadevia from MoneyGrow. Please go ahead.
Hi, Mark Jitendra. Congratulations on the great results. Just wanted to check, given the cash balances of 650 odd crores, has there been any progress on our acquisitions in Europe?
No, acquisition in Europe, we went through 2 due diligence companies, but none of them worked out at the last minute. One of them we were last minute outbidded, and the second one we just didn't move ahead after the due diligence part of it. So right now there is no pen to paper, and we are in discussion with one more company, but it's too early to say whether it will take any shape or color.
Right, understood. And given, I think a year and a half ago, you mentioned, your payout policy to shareholders of 1/3 of free cash flows. I mean, as I look at it in the last 10, 12 months, you haven't done a buyback and your dividends were still pretty small. So are you still adhering to that policy or has there been a change?
Yes, we are. Our capex was very high, so the free cash flow was very less. And the matter of fact, we have literally paid more than our free cash flow just to continue our trend. But we've spent over 160 odd crores in capex itself. So when we looked at our free cash flow, we had very limited. That formula would have not worked from a dividend point of view to ensure our trend continues, but we still continue our trend.
Excellent. And last question is on the in-housing of some of the CDMO projects on the APIs. What progress have we made? How many molecules have come under?
So we have filed, one DMF, and we are working on the second one right now.
Thank you. All the very best.
The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead. The current participant. Hello, Mr. Aejas. Can you hear us?
Yeah, can you hear me? Hello?
Yes, sir. Please go ahead.
Yeah, Mark, hi. I got cut off earlier. Just a couple of questions. On the US, could you call out what is the order book today?
About 180 million.
180 million, right?
Yeah.
And that's executable over the next 2 years?
Yeah.
Okay. And in the contracts with US customers, these increase in freights, are they like a pass-through, or is that something we have to absorb and it gets passed on with maybe a lag in the next, quarters or so?
So obviously we have to absorb this for the time being because we do not know whether this is a passing phase, whether it's going to last 1 month, 2 months, 3 months, and correct. So it's something that it is not something that can be passed on at this stage, unless it goes totally out of the spiral, out of control. Then we can go and present some pricing first. But right now we have to absorb it.
Okay. And as the facility for Teva scales up in the next few quarters, do we expect some more operating leverage to play out, or do you feel that will be eaten up by the incremental freight cost, similar to what happened this quarter?
I think the operating leverage, the more we produce, the operating leverage will definitely kick in. And we are hoping that the operating leverage will be larger than the freight cost. So while you can see the freight cost had gone up, but our results were still very prominent. So again, operating leverage is kicking in and will continue to kick in from all fronts. And based on that, yes, the freight cost is something that nobody wants wants to see it. 3 months back it was $2,000, now it is $6,000 as on this month itself. So nobody likes to take that hit of 300% on the freight. But again, it is going to be just part and parcel of the global geopolitical scenarios that are existing. But I do believe, and we are hoping that, I don't have a crystal ball, but I'm hoping that it will start coming down, because there is no rationale for it to keep increasing, because Red Sea is an old issue. And many a times I keep wondering what's driving this up, because maybe the shipping vessels are from the cartel or something, but I have no idea what's driving this up, because this Red Sea should not be a talking point today. But it is a fact that the prices are going up.
Noted. Thanks for that elaborate answer. And Mark, now that you have 2 facilities in Goa, how do you plan to repurpose each of them? Because your older facility, which you've been running for so long, that already had a certain set of line and products that you were making. So is it that if you could talk about how you are planning to optimize on the production, given that you have now 2 facilities?
Well, as the demand grows and as the sales grow, the whole facility is not going to be able to cater to all our requirements. So we have to basically start giving it to the new facility and make sure that we basically service our requirements globally, whether it may be for UK, for US, for Australia, for Canada. So obviously the company is growing. To touch 3,000 crores, we need 3,000 plus crores. We need 2 facilities. We can't just make that happen in 1 facility. Definitely, the second facility is already ramping up. We have already, in terms of tablets, it's ramping up to the level that we anticipated. So it's meeting our expectation. The speed, shipments starting to happen. And every month we can see some progress in the forward direction. I do believe the second facility will basically contribute larger than the first facility. It may take this financial year to see that happen. Next financial year, I do believe we will see the full results of that being played.
Got it. How much would be the sales from the Goa facility today?
I didn't get you. How much would be the?
So you said that Teva facility will overtake your existing Goa facility in terms of sales in the years to come.
Yeah.
So I'd just like to know, what is the sales from the Goa facility today?
Yeah, it is in the range of 750 to 800 crores.
Okay, wonderful. Okay. All the best. Thank you.
The next question is from the line of Naveen Baid from Nuvama Asset Management. Please go ahead.
Thank you for the opportunity. My question is actually a continuation of what one of the previous speakers had asked. If you could give some color, not necessarily a finite number, as to what is the pecking order of margins amongst your US, UK, and rest of the world business?
Margins are obviously like I said, it's good.
So we see, at the gross margin level, we see to it that all geography should give us 50% plus.
Okay.
So on an average, it is between 50 to 55% across these geographies.
Okay. But at the operating level, would it be safe to say that you'll be doing more margins in UK?
At EBITDA level, definitely, there are different numbers. And UK, definitely we have relatively higher margin. The Indian operations have relatively higher margin. US, we are catching up. So you will see a better number coming out from US geography also. So
would US be lower than the consolidated number for the company?
Yes.
Okay, got it. Thank you. That will be it from my side.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is a follow-up question from the line of Aditya Pal from MSA Capital Partners. Please go ahead.
Thank you for the opportunity. Sir, just wanted to understand. So, there have been news in the US that Walgreens, CVS have been shutting their pharmacies. Do we see an adverse impact because of that, or it's a no news type of a scenario?
No, we don't see any adverse impact of that. This is part and parcel of the cycle that US witnesses every now and then. And while they shut pharmacies, after 1 year they will open some more pharmacies and will reposition the pharmacies in areas which don't have pharmacies. Sometimes in the growth strategy, they go and literally open pharmacies every mile or every 2 miles or every 5 miles. So maybe they will just reposition it. So we don't see an impact on that.
Understood. The question would be that when you're speaking about M&A and hunting for opportunities in the European region, so are we looking at a company which is a marketing company or someone which has their own brands plus a manufacturing setup?
Yeah, it's difficult to cherry pick what we would like because that's what we've been trying to do. But from a manufacturing setup point of view, we are not trying to acquire a company which has a manufacturing facility. One of the due diligence that we did, that was one of the touching points that, because it was overlapping the capacity and the facility that we had, so we didn't want to go ahead with that. But we would like more with company with more market authorization and more pan-Europe spread, and we would like to leverage low-cost manufacturing base out of India.
Understood. And just last question from my side. So now, when you were talking to another participant about the Teva plant, so Teva plant will be fully utilized by FY'26. Are we hunting for new land to build, or are we planning to augment our existing facilities in terms of capacity? How are we thinking about that?
Yeah, I mean, a very valid point actually, but you're right. Teva facility has basically, we are moving at a very fast pace, both from a growth point of view, from a requirement point of view. So we have been discussing, exploring, contemplating within the core team, strategies beyond 3,000 plus crores. What back-end infrastructure we need to support, let's say, the next jump that we have to do after 3,000 crores. So we have to always align ourselves to ensure we have that support to fuel our growth. So we have to, in pharmaceutical, you got to plan 3 years before. You invest today, you see returns after 2 to 3 years. So that's typically how we move ahead, and we have already started working on that.
Perfect. Thank you so much.
The next question is from the line of Deepak Rao from KNR Securities. Please go ahead.
Hello. Good evening, sir. Congratulations on a great set of numbers. So I have 3 questions. So the first question is regarding the timeline for a US FDA audit on the acquired plant for Teva. And the second question is, just wanted to know if there's any guidance on how many filings are we aiming for in FY'25. And thirdly, I just wanted to understand what all countries are we targeting when we think about entering Europe.
To your first question, I don't have an answer because honestly, that's a regulatory question which basically no one has an answer to, and they are free to come anytime. So that is the first. That's the answer to the first question. The second one, in terms of the market, it is literally the same market that we already are doing our products. Like I mentioned, our first plant, again, we have to align ourselves with the demand and supply gap, and definitely our demand has gone higher than what our supply was in the first plant. So we are anticipating, we are servicing that gap from the second plant. And so basically the geographies are the US market, European market, the Australian market, and your third question was?
So regarding what countries are we targeting in Europe?
So I mean, right now, obviously the countries that, so right now it's only UK that we are servicing from this plant. But in terms of countries, like I mentioned, we are looking at M&As, and the countries of choice would be obviously the Western Europe, and we can start from Germany and then spread out from there.
Okay. Thank you, sir. That answers my question.
The next question is from the line of Dominic DeCosta from Axia Capital. Please go ahead.
Good evening, sir. Thanks a lot for the opportunity and congrats on the great set of numbers. I had two questions. One is, should we see an increase in fixed cost? How do you think about fixed cost for the next quarter? Should we see any increase because of better increasing capacity utilization? That's number one. Second is on the farm coil.
You're not audible. I'm sorry, I can't understand your question.
Sorry, is this better?
Okay, slightly better, but go ahead. I'll try.
Okay, so my first question is, should we can you guide us towards the fixed cost for the next quarter? Should we expect an increase because of the new Teva plant, or all the fixed costs attributed to the Teva plant is already in the P&L for this quarter?
The fixed cost is pretty much out there. There will be a slight increase happening, but most of the cost is already captured in the P&L. And as and when obviously we ramp up for the requirements, which is going to happen on a quarter-to-quarter basis, because obviously from let's say from 60 crores you want to do 100 crores, you want to do 120 crores. It's you need people, you need teams to execute that. So it will ramp up proportionately when infrastructure is ready to get it up to that level.
Thank you. And the second question is, any update on the 483?
No update.
Okay. Thank you very much.
Thank you.
A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Jayesh, an individual investor. Please go ahead.
Hello, sir. Good evening. Are you able to hear me, sir?
Yes, I am.
Yes, so congratulations for two things. One is consistent and good set of numbers. And the second thing is our company is a $1 billion company. So congratulations, huge congratulations to you and your team.
Yes.
Yeah. So my question is regarding the free trade agreement our country is trying to sign with UK. So when it's signed, will there be any benefit from the UK operations to our company, sir?
No, there will not be any specific benefit arriving out of that agreement. So far as pharmaceuticals are concerned, already there are no duties as such. So there may be some advantage, but nothing material.
Yeah. All right, sir. Thank you.
Mr. Jayes, does that answer your question?
Yes, yes.
Okay. Thank you. The next question is from the line of Niharika and Equitas Investments. Please go ahead.
Thank you again. So just one clarification that you said that Teva plant current capacity utilization is 25% and US UK is 65%. Did I hear that right?
The Teva part, yes. Yes.
And what about the Goa plant's capacity utilization, and why
5%,
US
yes.
UK have lower capacity utilization? Is it because we have overcapacity to cater to the demand, or is it lower demand? Just want to understand on the capacity utilization front.
5% is quite a high utilization. Our plants can't go up to 100%, so maximum they can go up to 80%. So 65% is a quite high utilization per plant. But that's said and done, it will increase as the demand, we have demand, and based on product launches and all, it will reach that peak. But we can't wait for it to touch 80% and then start planning. So we obviously that's where the Teva plant came into play to service the demand and supply gaps that we foresee.
Okay, understood. Thank you so much.
Yeah.
Thank you. The next question is from the line of Akash Thavani, an individual investor. Please go ahead.
Hi, good evening. So from the numbers that I could see, we have about 70 odd scientists into R&D. Two questions. One, do you see a correlation between R&D expenditure vis-a-vis growth in revenue? And two, do we have any plans of adding more scientists or any kind of programs where they would develop products which would possibly end up contributing significantly to the top line in terms of another revenue stream?
So as companies evolve, we get into more complex molecules. Number of scientists increasing will again depend on the molecules that we are adding in. And the growth strategy that we have in place. We try to maintain a discipline in our approach and not go overboard. But that said and done, we do believe it will be in the same range of what we are spending today. For the next 2 years at least, it will remain in the same range. It will be range bound.
Got it. Thank you. Thanks a lot.
Thank you.
The next question is a follow-up question. It's from the line of Naveen Baid from Nuvama Asset Management. Please go ahead.
Thank you, Brian. In your journey from the current 2,200 odd crores to 3,000 odd crores that you're targeting over the next couple of years, which market you think will lead this growth?
You said in our journey from 2,100 to 3,000, which will grow. So obviously the immediate growth of the fastest growing market will be the US market. We see the growth drivers being the US market, but that said and done, the UK market will also add value to this growth. But in absolute numbers and comparison, it will be the US market that will take us faster and closer to the 3,000 crores, with the UK market bridging the gap to hit that number.
Got it. Thank you.
A reminder to all participants that you may press star and 1 to ask a question. As there are no further questions from the participants, I would now like to hand the conference over to the management for their closing comments.
Thank you everyone for participating in our Q1 FY'25 earnings call. Thank you for taking time, and thank you for all your support and interest. Be safe and looking forward for our next call. Thank you.
Thank you.
On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.